Hi, everyone. Welcome back to Thrive Live. Today, following along our theme of reinvention, Jason and Ray are going to be talking with Rob Anderson, president of BV Capital. And they're going to discuss with Rob about how he has transitioned from Wall Street to real estate. So let me bring in Ray and Jason. Hi, welcome.
Hey, Ray. Hey, Beth. How are you this morning?
I'm very good from Katy, Texas, as usual.
Hey, Beth. How are you? Greetings from Denver.
I am in Katy, Texas as well, too. So.
Oh, you're in Katy this time.
We are in the same locale.
So tell us about Rob Anderson.
So very excited to have Rob on. Rob's a old friend of mine. And Rob, as you said, is the president of BV Capital in Dallas, Texas. Rob attended the University of Houston. He got a BBA in marketing. He was the president of Sigma Phi Epsilon fraternity. So that may be important to some people. He even has some stories for that. At BV Capital, he oversees operation and the direction of BV Capital, which is a member of the Bridgeview family of companies. It was founded in 2011, and Bridgeview is a private real estate development investment company. BV Capital is Bridgeview's private equity company offering direct access to investments historically only available to institutions. BV Capital distributes these investments to financial advisors, registered investment advisors, family offices, and high net worth investors. And we're going to talk to Rob about investing, reinventing yourself in the time of COVID, starting a new business, and a lot of things that people have really, come to Ray and I about in terms of starting over again, doing something different, taking the skills that you have at Wall Street and applying them to real estate. So he's going to walk us through a lot of those things that he's done. And I think he's got some really great information for us to think about as people start to think about reinvention and doing things differently. So, and he's a good friend of the family, and we're super happy and excited that Rob is here. So
right,
welcome, Rob.
Hi, Rob. Welcome.
Hello. Thank you.
Hey, Rob. Welcome to the show.
Hi, Ray. I must say, I've never been introduced with my old college fraternity before, so that's a first.
Yeah.
Go Cougs.
Well, we try to throw something in there that, makes people, gives you a little bit of a chuckle. We talked about Trey and his Alabama stuff and a few other things. So, all right. So we're happy to have you, Rob.
Yeah, we really are. Hey, we wanted to start off with your, you recently made kind of a transition, to the real estate investment market. Can you maybe tell us a little bit about how you did that, what you considered, did you think it was going to affect your career, because once you've been doing something for a good amount of time, it's tough to make a shift, and maybe kind of share your story with us, because it's very interesting.
Sure, I'd be happy to. Thank you guys for having me on. Ray, what's interesting is a lot of people see the result and they don't see the work that went into the result. We've read that time and time again with countless people, right? I had a great career with some of the largest Wall Street firms, some of the largest insurance companies out there selling investment products as a manufacturer of investments to the financial advisor community, and have a lot of great friends, and it's a great thing to do. What people don't know is I've been investing in real estate for over 20 years. I didn't brag about it. I didn't tell anybody. I didn't have a Facebook page telling everybody what I was doing. I was doing it on my own, with whether it's single family rentals, vacation rentals, or now commercial real estate. And, people just saw a big shift and a big change. How did, so-and-so move from what seems like unrelated career to unrelated career, and they don't see the transition? Well, what a lot of people don't know is I invested with my current company for the last 10 years as a private investor. And so you get to know everybody, and you get to understand what they're doing. You just don't up and shift overnight. You have a lot of homework that goes into it. And so I had a great day job. I'll even back up for a little bit. Many of you may remember Kiyosaki's book, Rich Dad, Poor Dad. It's a very famous book out there. I read it 20 years ago. I bought my first rental house and thought I was on my way to being the next Robert Kiyosaki, right? And, I built up 4 rental houses and had a vacation property, and I'm floating 5 mortgages. And there's a lot of people that do this, and it's a good get rich slow business, but it became a job. I already had a good job. I didn't need another job. And so when I discovered passive real estate investing, I sold all my properties. And I basically, the same money I was investing in single family homes, I turned over to what I found was a professional shop that did this for a living. They made me better returns than I was making on my own, and I didn't have to do any work. I didn't have to evict anybody. I didn't have to go release it. I didn't have to go fix something that broke. On and on and on and on. I could go on and on about that. But that's kind of, so there's a 15-year transition, I guess I would say, of just my investing career on the side. Now, keep in mind, I fully believe in the public markets. I have a lot of money invested in the stock and bond market. It's a little tough to do nowadays, but I'm not saying not to do that. But if you really want diversification, you've got to look at alternatives. And that was really what pulled me away, just to give you a little bit of background.
Great.
So what is when somebody goes and does something different and says, I'm going to go branch out and go work in an industry that I haven't worked in before? You talked about a lot of homework. What else was important to you when you made that decision to go from Wall Street to real estate? What else did you think about?
I want to know how it would affect my family. My family is very important to me. And I have 3 daughters, and I would do anything for them. And I moved 4 hours away to do this. It's very, it's somewhat of an entrepreneur where I'm building a company inside of another company, and or have built rather. And so you look at the industry, where it's going, the industry you're looking to get into, where it's going, and I tell college, I'm going to kind of shift on you, Jason, but I tell college graduates all the time, you do not take the job for what it pays you. You take the job for where it will take you. And it's all about having that long-term approach. If I make this significant pivot, where am I going to be 5-10 years down the road? And do I like that scenario? Am I willing to work crazy hours in that scenario? How is it going to affect my family? Is my family going to suffer because of the amount of effort I have to put in? What is the ramp up period? I mean, all of it. I don't know if this is where your question was going, Jason, but this is a lot of what went into it. Was really, do I see what I've been doing the last 20 years still existing 20 years from now in the same form or fashion? And for me, the answer is no. Do I see this change that I'm anticipating? Where do I see that 10 to 20 years from now? And I really like the answer to that question. And so that was a lot of what went into it. And then obviously, what is this going to affect? Is this going to have on my family? A lot of people can jump into something all excited. They don't pay attention to those around us. And why are you doing it? The why, I think, is what a lot of people miss out on. My why was not actually money dominated. It was work-life balance and family. And I feel like 5, 10, 20 years from now, my work-life family balance is going to be fantastic. It's actually already a lot better. So I might be a little different. That may not have been the right answer for you there, Jason, but that was a lot of what went into it for me.
No, actually, that is exactly the kind of answer that we were hoping for, because I think one of the things that, one of the things that we've been talking to folks about is that, what does that future of work look like? And what you've done is you've looked at the future of work, you looked at where things are going, and you said, I believe this is the right decision to make based upon all the evidence that I have. And we think that's wonderful. And we're encouraging people to understand what that looks like, because jobs are going to shift and change over the next 5 to 10 years. And so your ability to do that is super important. And what that allows people to do is to actually see somebody who did that and to start for themselves to be able to position where they want to be. So that's outstanding. So we love that answer. That's what we're all about, is transitioning for the future. So that's fantastic.
Yeah, that's great. Another question for you, Rob. The economy was doing fantastic, pre-COVID. Now that COVID happened, a lot of, people are never going to go back to the office, and that's going to affect, commercial real estate and other investments. What do you see, as far as an investor? And kind of what you're thinking about the market, and how to prepare yourself as an investor for that.
Yeah, that's a really good question, Ray. A lot of people ask us that right now. We have quite a few investors, and they all want to know what our view is on this or that or something else. So that's somewhat of a long answer. I'll see if I can rein it in a little bit. the future of real estate. It's where, right? And the big question marks right now are in retail, they're in office, and they're in senior housing. Senior housing is starting to come back. They had a big issue because a lot of the staff at these places, rightly so, they got scared and they all quit. Mm-hmm. And then a lot of the owners had to pay 1.5 to 2 times normal payroll to have workers come back. So that obviously takes a major hit to cash flow. Mm-hmm. However, folks like our parents' age are not, the demographics are still there. Now, the problem is senior housing was a little overbuilt. That is obviously getting more in equilibrium now. So I think that's going to revive itself. Office, I'm going to be a little different in that I tell you, office will come back. Mm-hmm. How many of our friends are tired of working from home? How many of our friends who have multiple kids in the house and pets, and they didn't buy a house built with an office, are tired of working from home? Now, what's going to happen is you will have less people in the office because the technology infrastructure is now in place where it is easier for people to not have to be there 5 days a week. Absolutely. I think the central business districts are the most piece that's in question right now. You're seeing a boom in office in suburban markets. So, from an investing standpoint, we look at that kind of thing. Now, another interesting thing to think about is they were building high density office space for years. The cubicles are getting smaller and smaller and smaller. Well, that's over. You need space in between people now. So you may have less people in your office, but it may be the same office space.
Right.
So from a landlord perspective, we actually think it's going to even out eventually. That doesn't mean we're investing in it today. Lastly, retail. Retail has been dying a slow death for quite a while, and that got sped up considerably. We tell people all the time.
But I want to go to Forever 21.
What's that?
But I want to go to Forever. No.
Your daughter may want to.
Yeah, exactly.
If you can put it in a box and ship it, then you're competing with Amazon. Mm-hmm. If you cannot put it in a box and ship it, then you're not competing with Amazon. And you don't want to compete with Amazon. They've proven who they are. And so if you're going to look at something that's retail based, for example, one of our current offerings has a floor and decor and a northern tool and things that Amazon's not going to put 2 pallets of tile in the mail and ship it to you. Mm-hmm. And they sure don't want the return if you don't like the way it looks. So, things like this is what you look at. And obviously what that is all leading to is a boom in industrial. Warehousing, distribution, even manufacturing is growing left and right. And that's really kind of where the focus is. Lastly, multifamily and single family are booming right now. Multifamily's got some challenges with renters. Single family's obviously doing very well as people are moving out to the burbs. You're seeing the millennials finally, they call it household creation, where they're getting married, they're settling down, they're having kids, they want the house in the suburbs. We're finally starting to see that trend. So it's kind of like the stock market. As you go through an economic cycle, large caps do better, other times small caps do better, and sometimes you have growth stocks that do better, and other times you have value stocks that do better. Same thing's true with real estate. Mm-hmm. Depending on where you are with things, there is a time. Now, you have to be diversified as well. So that was kind of a long answer for you, Ray, but on the short answer for you, there's no yield out there. The Fed took everything to near zero rate, so that's such a challenge for people looking for income, and that's actually where real estate can play can plug a big hole for you.
Yep. No, that's great. Yeah, that recurring income is amazing. As an investor.
Yeah, we like that. So, Rob, if you were working and you suddenly find yourself without, a job and you don't have that income coming in, but you still want to invest some money as you would like to create some recurring income, what would your advice be to people who are in that situation?
That is a very customized question. And the answer should be very customized to the individual. We also own a broker dealer, so we are regulated by FINRA. So I've got all of those compliance things up here. You cannot just say, hey, you've got money, let me have it. That's a big no-no. If somebody says that, you should run away. Investing is always about what are you trying to accomplish? If I put this money somewhere, what is it for? Is it for retirement? Is it for education? Am I just trying to grow money? Do I like the excitement of seeing it grow? And if so, maybe you should go to Robinhood and start trading. But the question is, what is the investment designed to do for you, right? First off. And then secondly, if you don't have a job, do you have 2 years in the bank? And if you don't, maybe you should not be depleting your capital right now. Okay. So I would actually ask those folks to stop and reevaluate their situation. I would have a hard time taking an investment from somebody if they did not have considerable means and they're out of work. I just would.
We like that. That's a great answer, and we have a lot of respect for you for saying that. That's amazing. So thank you.
Yeah.
So next question would be, what's been the biggest surprise to you that you didn't expect when you did your career's transition? What's something that you thought might have been easy but was harder? What was different than what you expected?
Ooh, it's interesting. We always think we are the best thing that anybody's ever met because we're such a narcissist society now. And whenever you jump into something new, the learning curve is fascinating, and learning figuring out what you didn't know that you didn't know, and then how quickly can you figure that out, learn it, get up to speed. That's always a challenge no matter what you're doing. So what was the biggest surprise? I don't know that I have a giant surprise for you. It's just that you'll forever have a learning curve. Now, I tell you, the beauty of making the switch like that is you're like the guy in the front of the Titanic with your hands out. Every day is just massively exciting, exhilarating, scary, frustrating, and fun, and all in one sentence. And so if that scares you, probably not the right move for you. But it definitely does get your blood going. And I tell you, Jason, what the real thing is, something new and different every day that you're learning and that you're getting to do that is different than what you did in your past. And that's exciting.
Yeah, that's great.
That's great. That's great. Now, earlier, Rob, you talked a little bit about, work-life balance, and now with COVID, what we're hearing that there's no more work-life balance. It's all merged together. We're our homes are now offices. Our homes are now homes as well as schools. How have you and your family dealt with some of these changes that have been happening?
Well, I'm probably not the best person to ask because we own our own office building.
You can control who comes and goes.
Everybody out, and then we went to the office.
Cheater.
I am lucky and blessed that my kids are in a private school, so I'm in a little different situation, Ray.
Yeah.
They did go back to school earlier, and frankly, if they didn't, I probably wouldn't have paid the bill. So now, but you bring up a great point, because a lot of America is still at home. Their kids are at home. Both spouses potentially working from home, and the house wasn't built for that. And that's why the suburbs are exploding right now. Because people are sitting there going, I don't know how much longer this is going to last. Living in the city is not nearly as cool or as fun as it used to be, because everything is still closed, or it's at 50% depending on your town, or if you're in New York, it is still closed. It just depends on what's going on. So you're seeing this massive migration to the suburbs, and you're seeing it with home values too. And why? Because people are wanting the house that has the extra office. They want the desk upstairs for the kids so they can go do their stuff. So, what I'm seeing is people are moving, because we don't know how long this is going to last. And, they're trying to look and see, because you can always move back.
Yeah.
And so that's what we've seen from a real estate perspective, is that, because it is challenging. And how do you do it? Now, it's funny. I've talked to a lot of my friends that are in other careers, and they are having to go home. They're sneaking into the office, and they're getting permission to go in 2 days a week. When did we ever think we would hear somebody say that?
Yeah, exactly.
Yeah. Yeah. No, it is. I mean, at some point you need that, that separation, because it is a challenge, and we see it here in Denver. I mean, it's amazing. The downtown has gotten so populated and there's nothing going on, so folks are just moving out further out, and I'm not far from downtown, but it's amazing the people that I run into when I walk the dogs in the morning, and it's like, weren't you living downtown and now you're out here? What's going on?
Well, and to your point, Ray, you can move a steamboat and do your business nowadays. You don't necessarily, unless there's a collaboration needed. Do you really need to be downtown? I mean, that's really the question.
Yeah.
And
Yeah.
you know what's interesting is the hotel. By the way, hospitality actually is the biggest segment of our industry that's hurting. I didn't mention that earlier.
Mhm.
But I don't know if you guys have heard. There are people that are renting hotel rooms by the day as their office.
Yeah.
Yeah, that makes sense. I haven't heard that, but that's a good.
Yeah.
That's
Yeah,
really.
because I was even reading about Las Vegas setting up, come to Vegas and work from Vegas, and they're setting up their rooms as mini offices also.
Oh, wow.
Yeah, there's no distraction there, right?
Yeah,
None,
I'm gonna work.
not at
I'm
all.
gonna work 10 hours a day in my room. Yeah, walking over to the Cosmopolitan isn't in my agenda.
That's right. That's
The
right.
other thing that I read recently is that there's things called Zoom towns. I don't know if either of you've seen this, where now people are buying property near ski resorts and lakes and places where it is a more or golf communities, because now they're saying, well, we can Zoom into our meetings and we don't have to be at work anymore. So we're going to buy houses in places that are really cool and fun. So I thought that was very interesting in terms of I hope these employees never have to go back, because it's going to be a challenge for them to leave their Zoom towns that they're creating.
Vacation properties are through the roof right now. For those people with means, they're either trading up or they're adding. I mean, if you just look around, and you're starting to see advertisements about investing there too.
Mm-hmm. That's great. That's great.
So, Rob, what closing thoughts do you have for us in this space? This has been a really great conversation with you. What would you tell folks that have been listening to you? And then tell us a little bit about how, if people want to meet you and talk to you and get hooked up with BV Capital, how they can do that.
Sure. Well, I appreciate it. Our website's bvcapitaltx.com. We're a Texas real estate shop. Real estate is local, so you need to be there. So it's bvcapitaltx.com. You can reach out to us, ping me on our website. I'll be happy to get back to you personally. The reason you need to diversify is if 100% of your money is in the stock market and you're diversified because you're in large cap, mid cap, small cap, growth, value, etc., you're still in the same vehicle. You're still in the same vehicle. And sadly, when I got into the business in the mid 90s, there was a nice diversification between even the stock market and the bond market, which we have not seen. If you go back to March and April and you look at the volatility and what happened, the VIX hit 68. That is incredible. No, it hit 80. I apologize. That's how bad this past March and April was. If you follow the VIX, it's a measure of volatility in the market. And back in the financial crisis, it topped out at 68. In March or April of this year, it topped out at 80. That tells you how crazy this year has been.
Wow.
And the point is, if you're diversified in the historical way of saying that, meaning I don't have all my eggs in the same basket. I've got large cap, mid cap, small. I've got value. I've got growth. I've got blend. I've got an index. I've got an ETF. I've got this. I hate to tell you, but you're all in the same basket. Those eggs are just spread out a little bit. And that's my argument to folks is there's nothing wrong with that. I have a lot of my money there, but if 100% of your money is there, then you're not diversified. And we aren't listening to our own teaching there. And that's why real estate is a great alternative to the stock and bond market. And sadly, in March and April, the bond market went down right with the stock market. There was not that separation that which should exist.
Mm-hmm. Great. And maybe you can tell us a little bit about, Rob, how your firm operates. I mean, you talked earlier that you worked with financial advisors. Do you also work directly with clients, or does it have to be at a certain level?
No, we do. We do. It's a challenge, right? Because the financial advisor community, I think, is incredibly important. We work primarily with registered investment advisors. Mm-hmm. These are the folks that charge you a fee for what they do. And if you have a registered investment advisor that you're working with, then please access us through that individual, because they are going to help you evaluate this. And if you've not looked at this before, you will need some help evaluating this. We do have a considerable amount of high net worth people that either are or are not working with RIAs. Most of the ones that come to us directly are not. They're managing their own money. And if you're in that boat, then I would say please give us a call. We'd love to talk to you. We do prefer and we are a big advocate of the advisor and what they bring to you. We are a fan of the registered investment advisor. Once again, they're not commission-based, they're fee-based. they do not benefit if you're an A versus B. And I think there's a lot of value. Plus, they are a fiduciary, which means they're held to a lot higher standard in court should anything go wrong. So we're a big fan of the RIA model. However, if you are somebody that is investing your own money, or you have the means to where you're just bypassing the RIA and doing your own thing, then absolutely we do work with you individually.
Fantastic. Thanks for that.
Mm-hmm.
Great. Anything else that you have to ask, Ray?
Nope, I'm good. Thank you very much, Rob, for your time today. This is fantastic information, and the goal here really was to kind of have folks think about how they can make a career change and how to pivot. And it sounds like your pivot has gone great, which is fantastic to hear.
And you're a great role model for people in so many ways, in terms of your great values with your family, your values as a business person, how you're so thoughtful in the things that you do. And so we really appreciate the values that you bring to everybody that you meet and are in contact with. And we just think that that's important right now. And you really exemplify the type of person and the type of firm that people would want to be investing with. So we think very highly of you, and thank you so much for sharing your time and your expertise with us.
Well, I thank you, gentlemen, for that. We view our business as steward in the same way we would view what they call stewardship, right? We're a steward of those investments, and if we need to take care of that first, and if we do that, then we'll be just fine.
All right. Any closing thoughts for us? Anything else you want to add?
No, I'm a big fan of what you guys do too. I think a lot of people overlook the needs in the HR space and all the complexities that are out there and the growing level of complexity. So I want to give you guys a good plug. And I've known some of the work that you've done. I've always enjoyed following you guys.
All right. Thanks, Rob. Hey, have a great
Appreciate
rest of your day, and we'll talk to you soon. Thank you for everything. We really appreciate it.
Thanks a lot. Take care.
Thank you, guys.